50 to 100 points of Nifty, upside still left in the markets. Again, we saw, stocks growing across sectors. So it was not only a single sector or a single company or a bunch of companies which actually took up the index, but we have seen stocks running up across sectors. So this was very good. On one side, when we saw that Maruti is coming down, we saw Force Motors, we saw M&M, we saw Motherson Sumi, and we saw stocks like Bosch. They were running up. So again, there was a huge balancing act in the markets. One more thing which I noted was that FIRs had bought on Thursday. So this was after a long time that FIIs have done some serious buying. So I think that this number should be better today. The FII buying number should be better, and this pure buying of the FIIs can take markets again to 8,300 levels. So hopefully we'll see better targets on the index.
In terms of the way some of the rate sensitives have been panning out, are you focusing on more of the rate sensitives or cyclicals out here? Because clearly you could see a little bit of a shift away from the defensives today. Some of the large cap pharma names were a little bit weaker. You saw HL also close in negative. So are we seeing somewhat of a portfolio churn once again?
When markets are aggressive, we see all the defensive stocks going for a tizzy. So I believe that rate sensitives, auto especially, and stocks like DHFL, stocks like LIC Housing, GIC Housing, stocks like Canfin Homes, even banks, they're going to do better in the next few sessions. For sure, the market has shown a very aggressive shift from totally being with the defensive counters to counters where we see some kind of a churn happening in these sectors. So for sure, I think that we are going to see a huge upside in the paint companies, in the auto companies, looking at the festive season around the corner. So we are going to see cyclicals also doing well. I believe that companies like L&T also should do well in the coming few sessions. But of course, it is with a word of caution, because globally still things are not that stabilized. Because a session or two of good sessions, good sessions on the American markets or the European market doesn't mean that the worry is over. So I think that it's a cautious approach, but again, it is a cautious optimism, I would say, that markets have, and I clearly see 8250, 8300 coming on the Nifty very soon.
All right, hold that thought. Now, new home loan customers will have to pay interest rate of 20 basis point above base rate, and that the existing ones will get full benefit of the 40 basis point cut. At least that's a word coming in from SBI chairperson Arundhati Bhattacharya. She also says that this is not the last of the rate cuts, either from the bank or the Reserve Bank itself.
This time the base rate cut has been quite huge at 40 basis points. We have currently passed on 20 basis points to new home loan owners, not to the old ones, mind you. The old ones will get the full cut, but the new ones we have passed on 20 basis points. But again, you have to understand that going forward there will be sufficient space for us, if necessary, to bring this down further. As I said again, that currently we are the cheapest in the market at 9.55%, and that is really not something very high at all, considering the fact that 2 years back it was much higher. So I think you need to take it in perspective rather than to say that the 40 basis points has to immediately get transmitted to the new buyers. There is no cap on any of these cuts. It will get transmitted through the system as and when we are able. Frankly, this is one area where we have done very well. We have managed to hold our costs in this area. The particular portfolio has also behaved well, and therefore we are very keen to ensure that our home loan customers get the best of product. This is just the first cut that has happened. This does not prevent us from cutting again. It will all depend on how the portfolio is growing. If the portfolio grows well, if credit growth comes back into the banks, then surely, these rates will be lowered further. Also, we have to look at competitive pressure. What is the competition doing? And if we find that there is a need, then we may cut rates even further. But having said that, as I said again, we have consistently been one of the lowest home loan rates in the market, and we intend to hold that position. The 1-year deposit is more or less repriced. It is now the 3-year deposit that will 1, 2, 3 years. So, what is going to happen is going forward, the repricing of the book is going to happen faster. And that will enable us to transmit more and more as the book reprices. It will very much depend upon your CPI numbers as well as the harvesting numbers as they begin to come in.
Alright, now Maruti Suzuki is all set to drive into Gujarat in style. The board has approved a contract manufacturing agreement for a period of up to 30 years with Suzuki's arm for the Gujarat plant. Chairman R.C. Bhargava says there is little reason for the deal to not go through. Listen in.
The arrangement is so much in favor of the shareholders of Maruti that it would be difficult to find reasons why this arrangement should not go through. The work on the erection of the first manufacturing line in Gujarat is in full swing. Scheduled date of commissioning, which was originally fixed, was around May 2017. The effort is always to try and do it before the target date. The funding of the project will be done entirely by Suzuki. Total benefits of the production in Gujarat, total, not partly or mostly, will actually flow to Maruti because the Gujarat plant is to run on a total no profit, no loss basis.
Now, even as Maruti remains confident on the Gujarat deal, influential brokerages like Jefferies have raised concerns on the plant. Jefferies has in fact cut Maruti's target to underperform from a buy. The brokerage has cut its target price by 19% as well to 3952 rupees per share. Jefferies is of the view that Maruti is stepping out of its areas of its core competence, and hence investors are not looking beyond near-term prospects. Alright, so on one hand you had Maruti, which saw a cut, while Tata Motors actually saw a decent.
Festive season coming in, I believe that the numbers should show up well in the coming quarters. So that's also one of the reasons why this is the best time when car companies do a lot of sales. So Maruti, of course, has been a market leader, and I'm sure that they're going to post good numbers in this quarter as well. If you look at other companies, I think Motherson Sumi, the correction has also happened quite drastically, and it has touched about, say, 220-25 rupees. I think that this is one stock which I would buy in, and probably the stock can go up to again 400 rupees within a span of 1 year. So this is one stock which I am looking at because the correction is much more. The stock was hammered about 40% from its highs. So I think that this stock can be bought into.
And Tata Motors, Vijay, because that's the other major one that was active in terms of trade today. Anything specifically on Tata Motors?
Well, the numbers which Tata Motors had posted, we were all guessing that the response from Chinese markets would be bad, but I think the numbers they have posted is quite encouraging, and they're not as bad as all of us thought the numbers would be. So I think that this is good for the company, and once it has come back, I believe that the stock has the potential of going back to about, say, 425 rupees. So definitely a good move in the stock today, and I think that the kind of numbers these Tata Motors has posted, so there is a decent upside in the stock for sure.
Alright, so that's as far as Tata Motors is concerned. Vijay, hold that thought. Now, as we head into a break, here our market guru, Mark Matthews, believes that while global markets may be moving away from an easy money environment, a rally in emerging markets is likely. Listen in.
I don't think the markets like low interest rates anymore. I think there was a tipping point sometime earlier this year where the market started to get tired of low rates because they're worrisome. I mean, Are we, does the low rates are possibly a sign that growth is bad? A major thing that's been holding back the emerging markets has been the strength in the dollar. And the strength in the dollar is on expectations that interest rates will go up. So if interest rates are not going up and the dollar does not get stronger, actually I think we could be heading into a time where we get a strong emerging market rally.
From this entire play, when we talk about the power sector and the kind of relief, if there is any kind of development on the SCB front that it could provide to a couple of these stocks?
Well, I think that there are few stocks I like. One is Power Finance, one is REC, which I like, and one is Power Trading. So these companies are on my radar. And of course, if this kind of relief comes to the discoms, there's going to be overall upgradation of the entire segment. I believe that the companies have been beaten down since ages now, and I think that the kind of profitability these companies can have, or balance sheets these companies can have, they're not able to have because of their past loans and the debts on the books. So if there is some kind of restructuring which happens, and some kind of breathing space these companies have, and all the companies are trying now to actually plug the leakages. So if this happens and they're able to plug the leakages, their profitability can increase, and the sector has been beautifully working on a PPP model as well. We see companies like Torrent Power doing well. We have seen Tata Power. I think these companies have quite a good potential of maybe becoming multi-baggers of the future if at all this sector is given some support. So I think that there's a lot of juice in the sector, provided the kind of support which is required from the central government and the state governments. If this happens, the policies are framed towards the betterment of these companies. I think that there's going to be a win-win situation for all.
All right, Vijay, hold that thought. In fact, let's also take a look at some of the mid-caps that were buzzing in trade today. Vivek's been looking at that list. Vivek.
The mid-cap index ended with gains of almost 2.5%. Looking at some of the gainers, we had a counter like Force Motors, where we had two companies, both Sunidhi Securities, that upgraded the stock to a buy, and also Indian Waste went ahead and has initiated coverage on the stock. Stock was up almost to 15%. Also saw a quantum like Uttam Galva, which hit the upper circuit at close to 20%, as 10.7. 5 million shares traded in a block deal. Also saw a counter like HCC, almost 4.5 million shares traded in a block deal. The counter again hit the upper circuit at close to 20%. And PFC up over 11%, as the cabinet is likely to meet to discuss the discom restructuring. Also, PFC went ahead and cut the interest rate on rupee term loans by around 35 to 100 basis points. Also saw a counter like Godrej Consumer up over 6.5%. The company is going ahead to launch new products that is mainly targeting the urban customers. Also looking at a counter like Educom, up over 12% in the session today, as the unit IntelliProp is planned at infrastructure companies like IRB Infra, JP Associates, Reliance Infra, also GMR Infra, all up in the range of 3 to 4%. Looking at the metal counter,